Hi there, my name is Dean Heskin. I'm President and CEO of Swiss America Trading. Thank you for tuning in to this episode of The Secret War on Cash. Again, I have Chris Agelastos with me today, Senior Account Representative at Swiss America Trading. How are you doing today, Chris?
Excellent, thank you.
You look fantastic. Thanks for being with us yet again. Hopefully we're not wearing out our welcome or putting too much of a time burden on you, but thanks for being with us.
Of course.
Chris, today I'd like to tell everyone exactly what's going today. What I'd like you to do actually is tell everyone exactly what is going to happen in the stock market over the next 4 months. And I'm kidding. Okay. Although if you could, I'm sure that's something just about everyone would want to hear. But on a serious note, Jamiedimon yesterday of JPMorgan was being interviewed on CNBC. And he said, I quote, "It would be a huge mistake to think this economy is going to boom with so many risks out there." He's not alone. He's one of several who have voiced very similar remarks recently. And I, for one, would love to see our economy, our markets, our banks, all as healthy as could be. And I'm sure you would as well.
Sure.
However, I do realize that there are some mathematical realities that we're being faced with right now that are kind of standing in the way of that. Now, I know you're familiar with Jamie's interview yesterday. Maybe could you explain a little more to those tuning in, why he's saying what he's saying about, these risks and whatnot that are out there?
Sure. Yeah. And what I like about Jamie too, he's not an overly emotional guy, right? He's what you would kind of expect a stereotypical banker to be. So he's big on facts and figures. And so when he comes out and says something like this, it makes people listen. But a couple of the main points that he brought up here is that banks are really starting to tighten up their liquidity, right? They're reining in they're lending a little bit, so making it harder for the average person to be able to get loans and get funds that they may need, or businesses to expand. Another major point, government spending, right? I think most people have probably heard that government spending is out of control, and it's not just here in the U.S. But internationally. And so there's a lot of dangerous uncertainties out there as well. And our poor relations with BRICS nations, primarily China, that we've been talking a little bit about. So when you put all of that together, it's just sort of a dangerous cocktail. And he's warning people that, don't be too complacent. We've got some tough times ahead of us.
Well, and normally I like cocktails, as you know, Chris, but that is a cocktail I do not want anything to do with.
You want to avoid that, yeah.
By all counts, yes, and measures. Chris, related to the remarks that were made by Jamie that you were just sharing, I did read also a few days ago similar things that were being said by Milt Berg, who is known for being one of the advisors to the super wealthy or elite out there. In his case, he was specifically referring to the S&P 500, saying that he feels it could crash by as much as 50%. 50%. Now, I know the S&P it's an index, it uses averages, but you've got one of the more well-respected and used money minds out there, someone who deals with the financially elite of this world, saying a market could drop by 50%. How does that not send people running to get out of that market?
Right.
I mean, let's say he's wrong by half. That is still a frightening number when it comes to you, your money, my money, or any of the people tuning in right now. If you could explain a little bit more as to why he's saying this, and if you don't mind me asking, do you think he's right?
Yeah, I think he absolutely is. It's more than just possible. I would say imminent. He points out one of the major things that would probably be obvious to a lot of people is that we're on track for a brutal recession and a banking crisis. Either one of them on their own, a pretty big deal, right? But on our way to having both of those things happen. And I know a lot of people were shaken up by the SVB, bank failure several months back, and some of the other smaller ones that followed that. But he's saying that is merely the tip of the iceberg. And a lot of people have already become a little complacent and, out of sight, out of mind, right? We're not hearing about the bank failures every day. So people have kind of shelved that. But, he's essentially comparing, in fact, not essentially, what he said, to stay on the cocktail theme, is that the market right now is like a drunkard on a tightrope. Any little movement, a gust of wind, anything unexpected could cause a complete crash.
Wow. A drunkard on a tightrope. That paints a picture.
Right, I know.
Good Lord. Well, Chris, enough with all the negativity. Let's talk about a hot, exciting topic, gold. There are several analysts quoted as saying gold prices could hit $2,500 an ounce by year's end. In fact, for our people tuning in today, Chris, what is the price of gold currently? Do you have that close at hand?
Yeah, just over 1900, maybe 1910 at the moment.
So let's call it 1900, 2500. It's a $600 increase by year's end.
Yeah.
In the article shown on the screen, for those of you who are viewing this, what many of our listeners might be interested to know, as great as it will be if gold does perform as well as they're saying, if you're in the market or if you're looking to get in the market, it's already outperformed several other major asset classes in the last 12 months. So, I mean, it's not just what they're saying it's going to do, but the beauty of it is, or what's nice, it's already been doing that. It's the trajectory is already occurring. I guess, Chris, the question I might have for you is, why has it been performing as well as it's been, and what do you see happening that might cause it to perform as well as they're suggesting it will to finish out the year?
Yeah, well, the main things that have been pushing it are obviously the breakdown in the dollar. I think most people realize that the dollar, isn't what it used to be, isn't nearly as strong. We've talked about BRICS nations going away from it. So, the dollar on its own is a very serious issue that plays into gold prices going higher. Also, gold has held really strong against rising interest rates the last year or so. And a lot of times when interest rates climb, gold can tend to dip because people are chasing, higher CD rates and things like that. But that hasn't really happened here. So we haven't seen any real weakening. It's held really strong. And then, one of the other big factors that push gold prices is uncertainty and inflation, right? So we're all feeling the inflation at the grocery store and most other places. And I think certainly you can say there's uncertainty in the world, not least of which is Ukraine and these issues with the BRICS nations. So you put all of that together and then add in the final little cherry on the top is all the central banks that have been buying and buying gold to shore up their reserves. And I think that's one thing that a lot of people really don't think about. But, if the major financial centers in the world are stockpiling gold, what does that tell the average investor? Maybe you should be doing something similar for your own household.
Sure, absolutely. Well, I mean, the numbers are impressive. I mean, we started off talking about the jamiedimon, and then talking as well about Milt Berg, who is suggesting the S&P 500 could crash by 50%. We're finishing here talking about gold, which is currently 1,900, and many experts or analysts out there are suggesting by year's end it'd be 2,500, which is $600 increase, which is good Lord, what is that, roughly 60% or something like that. So I don't know, it may make sense to maybe get out of one area that could go down, according to Milt Berg, as much as 50% and get into another area that's going to go up over 50%. And for those tuning into this podcast, as always, like, if they have any questions about gold, moving their IRA into gold, if they just want general information about Swiss America, about the markets, the economy, today what I'd like to do is offer them to call or text, and you can reach Chris direct if you'd like at 480-548-2975. It's on your screen, 480-548-2975. What I'd like to offer today is, as a special offer for those tuning in, a recent book that I co-authored with Jerome Corsi, entitled How the Coming Global Crash Will Create a Historic Gold Rush. For those of you even who don't maybe like to read, chapter by chapter, it has something in there for everyone, discussing all the things that are taking place in the economy today, what some of the experts and forecasters are. What I like about this book that Jerry and I put together, actually, it gives an insight into things, but it does so in such a way where we leaned on several third-party sources, meaning it wasn't just Jerry and I perhaps giving our opinion, but looking at what, again, many of these experts, these analysts out there are saying are going to occur. So if you'd like a copy of that or information on gold or anything pertaining to our company, call or text again, Chris, at 480-548-2975. Well, Chris, thank you yet once again for being with us today. Great information. Love the show. We covered a few different topics today, so I felt good. Look forward to maybe the next time that you're with us. And for those of you tuning in, thank you for doing so. I'm Dean Heskin, President and CEO of Swiss America, and look forward to talking to you again here sometime soon. Have a great rest of your day.